Okay, so this is my attempt for equity market. What are the genesis means first step should be. But before that, it's just my personal view. It's not any advice. And please act on your own risk. So it's your own decision. So over here, someone should start a equity market, right? So we can discuss other later also. So yeah, so first you need to uh, see this PPT is more generated. So I will be speaking. I think that you should concentrate it. So first you need to educate this generating and obviously goals would be start with long-term goal, right? And then you go for shorter time and start with small money, right? And don't destroy money. And then if you are successful, then you should go big and still with good management risk. Otherwise, there's no need of destroying capital. There's mutual funds are there, FDs are there. It is better to invest over there than instead of destroying your capital, and eventually it can affect your health and relationship also. Because if you destroy your money, then it will be very catastrophic failure. So better if you are not successful, better get it done by something else, mutual fund FD, and I think these are the safer option and good. And you have other options also. So before what first thing you should look when you're going to start in market. So people approach market in reverse way. People start with option and they want to earn very high, and then they go for the news, any Tom, Dick, Harry tell anything, and they buy anything. So basically they're acting as a pig. And so people then they maybe go for indexes. So what I think in my view, you should look first. The first thing that you should look is volatility index. So volatility index, what is volatility index? I think this is, in my view, one of the most important thing which you should look before looking anything else. If you are in that technical side, you are going right. And before that, obviously, you should have some foundational fundamental analysis also, right? It doesn't mean you should have very in-depth, but some fundamental, at least a macroeconomics understanding should be there. I think that will be good. And maybe we cannot rely on the company statement or news, public information. So what tools you have? I think I don't that much rely on the company statement, but I read it and I make my own interpretation. So I don't just go by whatever there in the company statement, but yeah, they what the product they will. If you go fundamentally, somewhat fundamentally, you should know, right? Pure becoming technical is also good that you can do. But anybody who is pure technical, they also look some fundamental. Yeah, so we can say algo trading also, but there's also fundamental. I think that is a little complex concept, so discuss later. But I think first you should look for the volatility index, right? Yeah, where the high volatility or low volatility. It's like you're going to swing in the ocean. So if you are new, right, you want to go in high volatility when tides are high, right? Because ocean looks very beautiful, but when you enter, you don't know what kind of predator is sitting inside. So you have seen successful people, but there are a lot of predator people have gone inside the ocean and they have never come back. Or means basically money have been put and there is no hope that money will ever recover. So if you're starting, maybe start when market is low volatile. You can do your own research. But volatility index, you should first, I think one of the first thing you should look. What is the volatility? How much market is going to run? So that is very important thing. Secondly, you should look for the indexes because if there is a index, that means why there is a index? If you ask, right? If you say any country level index or any sector level index or whatever index is there, so that index have been created. That means the government is there. They want to monitor that thing. So if a sector is without index, means government has not till now make a action. Maybe here make a option, right? So we are talking in the world where we want a data which is right, and finding right data. So you need to filter the wrong data and find the right data. This is my personal view. So index tell better than the individual. I would say I will not call it stock. I call it not. I call it security also, but I will call it instrument. But once you look different kind of indexes, one index I think everyone should look is bank. Obviously, country index you should look, and I think FMCG is also good index. Obviously, then different index change with the country, right? Where they are doing good and thing. That analysis come from fundamental analysis. If you want to get into there, so then you should look the indexes, right? So then you select maybe indexes, and you invest for diversify in different indexes, so that if the index don't perform, obviously index will eventually will perform, because that's why they were being created. In long term, I believe index will perform. So don't have a short view. So put the money which you want. You can invest the money at least for 3 and 5 years. So that is will be, if you don't want to destroy and if you want to take high risk, I think that is the very different ball game. Yeah, that can be also done. You can trade the crypto at 200x. That is all possible, but see, when we talking about the Genesis law, to start sensibly and safely. And then you say if it's a different sector. So we say sector A, B, C, D, whatever. So you can select the sector, and then sector you diversify in different sectors, so that obviously if index, as I repeated, an index is there of a sector, that means that will eventually will perform. And can you go to instrument selection, which with security? I don't like term the security because it give a false representation. Okay, your money will be safe. So security, the term which I like the least. Equity, share, stock, those are fine. But the term that I basically like is instrument. That what are the different mechanism it has and how you can play with this. So when you selecting a instrument, obviously select from different indexes. So, okay, if you like some index, okay, you feel this bank's index, FMCG or IT or manufacturing, consumption, whatever, you liking the index first. Then you find the right stock. Okay, this stock looks good in this, which has good fundamental and has at least, I say, 10 year in market and have been performing good. So, so that is consistently performing. Those kind of thing you should start in the start, and with the right view, and as I avoid buying at the top, let it come down, so that it has spent some time, it has created some value in it. So if you want to do growth investing, that you can also do, but in a starting, I think doing value investing, so there is not a big term value and growth investing. So value investing is basically, say when price go 100 and then it come to 80, so that is a good, you are getting a 20% discount already, and obviously it has spent its time also. So you are getting basically two benefits over here. One, you're getting price discount, and if it is a good performer, obviously now the it has also spent some time from coming from 100 to 80. So in this time is also safe, obviously then it has potential to go to 80 to 100. So then it may be a safer bet. The equity market is there, right? Even there is no 0% guarantee. If you want guarantee, go for FD or the bond market, right? If you're coming in the equity, don't put so much money. Okay, make the mistake, but you should make sure you can make couple of more mistakes. If you know that you are not the performing from, see, the time duration you cannot say. If you're successful in 2 years, you cannot say you're very great, because if you are great, we'll learn and keep buying. So seeing yourself when you successful is very subjective. I cannot rely on any market definition. I usually don't go on any by market definition. I create my own versions and then I go with those market definitions. And see what I say, okay, things are right. So don't go for high return. It's okay if you are going with high risk and see you go and going very high risk. You go to crypto and you invest. Obviously, you can get very high return in crypto, but see, when you go with high return, then people don't have appetite for the high risk, and people think that they can go, but when money you put, they act like I would say orchid or some different animal picks. So people start with option, right? I think people are starting very reverse game. So option is problem is this in the option when you're betting in the buying option, say, or you're selling option. Just say we are discussing about buying option. That means you are betting against time and price, right? So you say I buy option for 1 month or 1 week. Then you are betting. Are you so good that you can predict movement in 1 month or 1 week, right? People not able to predict in 2 3 years, and you thinking you will come and you bet on the option and you will make the money. I think that's not a realistic, right? And in any field you go, in any field, there are more unsuccessful people than success people, right? So if you go to any top level state, any state exam, so there you find percentage point 0.1, 0.2, but equity market is maybe 80 95% people are not successful. Only 5 people are successful. And even you evaluate those 5% people who is profitable. So maybe many of them are not even beating the FD, bank bond, right? Then obviously they are profitable, but I won't call them like really profitable. And then there are the people who are not even beating the index, right? So if you're not able to beat the index, better invest in an index now. Why you need to take risk unnecessary? So if you are not able to beat the index, I think there is no point of putting big money. Then you should say you are basically a mature or native person, and it will cost other things also, right? If you have parallel job, it will destroy, it will create impact over there. So if you're not able to, till you're not able to beat the index, you should not begin invest, right? It's better you invest index or give it to mutual fund, or you can do FD also, or you can keep money at home, or you can put in the bank, have saving account. Those are better instead of destroying machine. And the emotional decision never take, right? Because when you put the money, you become emotional. So if you cannot control your emotion, market is, I don't believe, is not for emotional people, right? So if you cannot control your emotions, better do some with who control emotion, right? Mutual fund and FD, those are doing better, as I say. And putting on one stock, diversify is very important, right? Unless you, if you have inside trading, I think that is uh, not right. And I think the ignoring fees, I generated this PPT. I forget to edit this. I'm not saying about ignoring fees, but if you are not successful, then I would say don't destroy money. Go out to the market, keep very small amount, and then do the rightful things. So that's all that I want to put in this my presentation for the Genesis block, and let's see how this goes.